name's Andrew Stotts from Maybank Kim Eng, and today I'm going to talk to you about why Delta Electronics is in my portfolio. Before we get started, just to note, I've made no changes to my portfolio, continuing to go with the stocks that are in it, but I'll keep reevaluating that on a weekly basis and let you know if I make any changes. In this report, I talk about the fact that Delta is a defensive value stock, and I try to explain why value has a place in a portfolio. Also, I highlight that you should never underestimate dividend yield and its contribution to return. And also, some people have asked me, is the Thai market getting expensive? So when is a market expensive? I try to answer that question. And finally, I'll talk about the merits of defensive stocks. So first, I'd like to highlight that I sat down with Mr. Heng Sian, and his nickname is Henry, so a lot easier for us to say. We talked at length, he's the CEO of the company, we talked at length about the strategy for the company, so I include that in this report for those that want more information. Now, what I want to highlight is just the fact that Delta has had a tough time. This is not a growth company, because we can see already from this chart that the growth in revenue has not been there. They did an acquisition in Germany which got them into the display business, and they got out of that. By 2008, they were completely out of that. And so what we're seeing right now is not particularly great sales revenue, but I think that they got a chance in the future. Now, what we can see and what's attractive for me is that the gross profit margin as they exited unprofitable businesses has been rising, and that rise is something that I see as quite a valuable opportunity. Now, what you can see from this bar chart is the blue section basically shows the display business that they had, meaning monitors and the old style of monitors before we had flat screens. And basically they got out of that business, and as a result their margins rose. The problem that they have is that this company is developing its own products, its own brands, and what you see is it has a high R&D expense. So right now R&D expenses have been absorbing that gross profit margin, but over time I think R&D is coming down. We'll see that feed, the gross profit margin, feed more into the bottom line for the company, and that's the opportunity. Now, I'd like to ask the question, why value stocks deserve a place in a portfolio? Well, first of all, Fama and French many years ago proved that there was a value premium. A value premium means that value stocks earn higher returns than regular stocks, or growth stocks we'll call them. And in this case, we back-tested that going back many years in Thailand, and in fact, value stocks outperform growth stocks in Thailand by 2%. If you adjust it for risk, they still outperform even more. And in the world, I looked at Asia, ex-Japan, and in the world, and you've got also about a 2% value premium. So value stocks have a place. And we can see in this chart, in Thailand, value stocks have outperformed growth. In other words, what usually happens is that people pay too much for growth, and then the share price doesn't deliver. The next thing I want to highlight is why is dividend yield so important? A lot of times I have stocks in my portfolio that I may not think is going to have a big capital gain or run in the share price, but the dividend looks good. Why is that? Well, you can see if we go back over many years in Thailand, you can see that the average contribution of dividend to a portfolio is about 3%. That's about 30% of total contribution, and in the case of a value stock, it's almost 4% that it's contributed to the total return of a portfolio of value stocks. Growth stocks don't deliver dividends or capital gains. Now, if you look at Delta, they've got about a 5% dividend yield right now. And going forward, that's roughly the estimates of what we expect. So I think there's an opportunity in Delta, being a value stock and a defensive stock, that we get a yield also. So let's talk about the market, because it may be important to hold a defensive stock if the market's high. Is the market high? Well, let's look at that. This goes back over more than 20 years, looking at month by month, trying to understand if you bought the market at a low PE, would you get a return over 1 year? If you bought the market at a high PE, would you get a return over 1 year? And what we find is that up until about 15 times PE, you're safe. You're probably going to get a good 1 year return. But once you go past the 15 times PE, you start to run the risk that you're buying too high. This applies only to the market, not to individual stocks. And so for this case, we can see that Thailand's trading at about 13 times PE, And the result of that is that we're not yet expensive on this measure. So I continue to be relatively positive on Thailand. Now on another measure, price to book, we have a lot less data that's available on this. This only goes back to 2003. And what we can see is that that cutoff is about 2 times, and Thailand is right now at a period where it's actually trading slightly above that. So there is a little bit of a warning sign coming from that, but I think at this point I'll still run with it until we see that both measures give us a scary sign. Now let's talk about the merits of defensive stock. Previously we did research looking at basically what is the performance of companies that have low gearing versus the performance of all other companies. And what we can see is that during times of crisis, low gearing stocks outperform. In other words, in this chart, the bar is above the line. They outperform companies that don't have low gearing, basically, or high gearing stocks. And so if you're worried that the market's starting to get expensive, then a low gearing or a high cash company is valuable. Now we went and looked to every stock in Thailand over time and basically determined that the leaders in having the lowest amount of gearing are CPR, STEC, BEC, and also Delta. So again, we come back to this is a value stock but also a defensive stock because of the cash component. So that sums up this week's research. Again, Delta is a defensive value stock, and that's why it's in our portfolio. Thanks for listening.